As many of you have heard or seen online, there is some outrageous claims that the DC market is falling out beneath us. Most of these posts are circulating across social media in a viral way, and Scott and I decided that we should break down the numbers and get to the bottom of what's actually happening in DC, both anecdotally as agents who are working in this business every single day, as well as bringing you the stats pulled from our market that address the fact that what's being put out there is just untrue.
A lot of you are aware because we've got an outpouring of both buyers and sellers saying, hey, is this accurate? What's happening? Why are these numbers? And it's from several reports that came out over the weekend on social media. Some of these are economists, some are just third-party sites that do traffic counts and things like that. But essentially it said that inventory is up 35%, that prices are down 20%, and all of these other things that are happening. And so our purpose for coming on today, which is what we always pride ourselves in, is providing the transparency on what's going on in the market on a year-over-year basis. We do RBI stats every single month for Montgomery County, Washington, D.C., and Arlington County, so that you can track and follow what's going on, where the direction of the market is going in different asset classes and all that kind of stuff as well. So we're just doing this video as an educational forum because of this information that has come out, to go over some data points in real time on this is what's happening right now, so that you're aware across the DMV, so that you can make informed purchase or sale decisions.
To touch on one thing that Scott just mentioned, so we're making that video every month. If any of this was true, having done October, November, December, and January, looking at the month before, there would have been strong indicators in our data analysis along the curve of those videos that would have also alluded to this so-called market fallout because of a massive spike in inventory and massive drop in pricing. So in coming back to the data on this, let's dive into it. Frankly, we can just start with how many showings across the Washington, D.C. area are occurring on a weekly basis. The amount of showings, yes, it is slightly down compared to the previous 2 years, but its general trajectory of showings per week is very on par with the past 2 years, which is not surprising because of the seasonality of the market and watching showings starting to ramp up as we get deeper and more into the spring market.
So what Daniel's speaking about is context.
Yes.
They say there's lies, damn lies, and statistics. You can make a number look like anything you want it to be. The reason showings are down is because inventory is down. Inventory is up into the new year, and we are still at like a 2.3 month supply of inventory. 6 months of supply is considered equilibrium in the market, where it's not a buyer's market and it's not a seller's market. We are so under market as far as the amount of inventory that we have that a huge price decline is almost impossible until we see inventory drastically improve. And I'm going to jump out of context because we're talking about context of what the percentages and things actually mean, okay? And I have a breakdown here of the exact numbers from 2024 to 2025 as far as, and this is by county and city, as far as the new listings by county, okay? So if someone wanted to, they could say Falls Church City's up 25% given the amount of inventory. But the reality is in 2024 there were 4 listings, and this year there are 5 listings. So yes, inventory is up 25% in Falls Church City because of one additional house. That is where the context of understanding your market, and when we say that the market is nuanced, it is very hyperlocal and it depends on the asset type. So if it's a fee simple property detached versus a attached row home versus a condo, all of those asset classes are trading very differently depending on where you are, depending on proximity to metro, schools, and all of these other factors, which is why you have to dig into the data. You can't just say DC. You have to look at specific neighborhoods to understand what the market is doing and where it's going.
I think it's also important in the data that we pulled that is both monthly and weekly, but the weeks that we're looking at in this broader context for the Washington, D.C. metro area shows us a line graph that spans the entire year. So it's important, again, in contextualizing that, yes, we're looking at these first few weeks of this year, but we're contextualizing that against full year graphics of data for the past 4 years, and really we're focusing more so on the past 2 years because the interest rate environment, the conversation around what is the Fed doing has been so much more in line with what we're experiencing right now. We're setting COVID and the low interest rate where everyone was active, everyone was trying to buy aside as a bit of a misnomer because that was such a specific market condition that doesn't really compare to right now.
So let's do this. We want the goal is to put you at ease so you understand what the market's doing right now. For additional information, you can always reach out to us. We're happy to go through your specific scenario and talk rent versus sale versus what should I do. And we're doing that on a regular basis with clients right now, whether it's meeting them at their house, meeting for coffee, etc. That's what we're here to do. But Daniel and I now are just gonna go through some of these numbers and we're gonna post a copy of this PDF so that you have it and you can go through all the same data and look at it and absorb it. And if you have follow-up questions for us, again, reach out, we're happy to do that. But these are just to give you a sense of in real time. So this takes us through the middle of February is when these this data is pulled. So it is as time is of the essence as possible. So these are the most up-to-date, including settlements as late as February 14th, which was last Friday.
So just looking quickly, when we approached early February, if you're looking at weekly showings, we hit almost 20,000 weekly showings the week of 2/2 to 2/9. That, yes, a little bit less than the past 2 years, but on the curve of what we're talking about here, those same weeks, you're looking at about 21,000 last year and 23,000 the year before. So when you've got a bigger spread of data like that, those are very consistent with what we would expect in the seasonality of the market.
And here's the biggest takeaway from the weekend that people were freaking out about was inventory is up 20, 30% in Washington, D.C. and prices are dropped 20%, right? Well, here is a real-time statistic on the active number of listings from 2024 as of February 16th to 2025, February 16th. Full DMV, so Washington, D.C., Arlington County, Fairfax, Montgomery County, those areas that are considered DMV. There are 9 more listings on the market than last year, which in a sample size of that size is a basically 0% change in inventory.
Yeah.
This is
it's
up
not
to date.
statistically significant.
It is not statistically significant
Yeah.
as of February 16th, and today is the 18th. So as of 2 days ago, this is tracking all active inventory. And we are off by 9 listings across the entire DMV metro area. That is normal supply, okay? And again, to point out what we were saying before, that inventory level is low and it puts us in a seller's market in a lot of these areas.
What's interesting is Scott's addressing total amount of inventory that's available. Let's hone in real quick on brand new listings last week. If this whole fallout of the market, everyone's putting their property on the market right now, were true, week over week, you'd see numbers skyrocketing, and you just don't see that. In fact, if you look at this week compared to a year ago, or even this week compared to last week, we are down 4% in new listing inventory for both those time periods. So inventory at that sample size, pretty consistent with what we would expect coming into the spring market. I think if you look through the charts that we're going to supply attached to this, you're going to see that what you're hearing, what you're seeing online is clickbaity nonsense, and unfortunately that had a virality to it that scared a lot of people, caused a lot of, thankfully in some ways, caused people who know and trust us and other realtors who look at these kinds of things for their clients to reach out to them, whether they're actively looking or living in their home and deciding what to do. but now you know the facts. And trust me, if the market were falling out like that, there would be a much bigger reaction from the agent community over how to deal with that kind of market. Ask yourself, if agents aren't changing week over week the way that they behave and how to get clients into the best position with some kind of radical behavioral change, the market is probably not changing radically either.
And let's be clear, we're not saying the market is perfect, right? There are soft spots in the market depending on where you are, and that's why we say it's nuanced. Whether you buy or sell is based off of your position in where you are in life and financially and all of those components that make up the decision of, is it the right time to buy or sell? That's part of this equation. So what we say is the market is uncertain. There are changes going on in our market, and we make sure that we're staying on top of this. It's why we're releasing this video now. It's why we do the RBI stats every month, to follow those trends and follow the momentum of the market so that we can be advising you and giving you the insight to make the right decisions.
Thanks for tuning in, and we'll catch you on the next ridiculous video that causes us to give you data just like this. Or subscribe to our monthly videos, which give you data-driven insights across the DMV month over month.
See ya.